Have you ever wondered how people save huge amounts of money on taxes by donating stock or other property to a charity? Today we're going to cover how that works. My name is Merrill with Tax Tutor. I'm a CPA with over 20 years of experience. I've been helping business owners save substantial amounts on their taxes. Some clients save $10,000. We've helped other people save up to $1 million a year in taxes. Today we're talking about a powerful yet often overlooked advantage tax strategy, and that is the leveraged asset donation. Leveraged asset donations are a unique strategy that can provide you with a large deduction while making a meaningful impact to the charity that you're donating to. There is especially a benefit for high net worth individuals or business owners with highly appreciated assets who want to give back without maximizing their tax benefits. So what exactly is a leveraged asset donation? Essentially, it's a donation where you have leverage on an appreciated asset like stocks, real estate, or even a piece of artwork. That gives you a benefit both from a tax deduction and helps you avoid capital gains on the donation of that asset. So let's say you have a stock that's growing significantly in value. Instead of selling the stock and incurring capital gains tax, you can donate the stock directly to a charity. This way you are eligible for a tax deduction equal to the asset's fair market value, and you avoid capital gains altogether on the appreciation of that stock. Let's take an example. Let's say that you own Tesla stock. Let's say that you purchased that Tesla stock for $10 years ago, and it is now worth $100. If you donate that stock to a charity, you get a deduction of $100, what that stock is worth, and you don't have to recognize the $90 of gain that stock has appreciated. So that appreciation from $10 to $100 is not taxable as gain, and you get to deduct the whole $100 that you donated to charity, even though you only paid $10 for that stock. So let's dive into some more of the benefits. First, as we mentioned, you get a significant charitable deduction based on the fair market value of the asset, of that stock or whatever the asset is. And secondly, you completely avoid capital gains tax on the appreciation of that asset. This can mean substantial savings if the asset has appreciated significantly over time. For high-income earners or those with highly appreciated assets, this strategy allows you to give more to charity while maximizing the tax benefits. In other words, you get to do good while also achieving optimal tax efficiency. You get to kind of kill two birds with one stone that way. Now, you might be wondering, what types of assets can you leverage in this way? Common examples include stocks, real estate, art, and even certain business interests. Each asset type has unique rules, so it's important to work with a tax professional to understand which ones are eligible and how they'll impact your overall tax strategy. As an example, if you have shares in a publicly traded company that have appreciated significantly, donating these directly to charity can yield a large tax deduction and eliminate the capital gains tax, just like that Tesla stock that we went through just a moment ago. Real estate is also a strong candidate, but it requires a few more steps and a proper valuation. So how does this work in practice? Let's break it down into a few simple steps. First, you identify the asset that you want to donate and ensure it has appreciated significantly. You also need to own that asset for over a year to make it like a long-term capital gain asset. So it needs to be in your hands for over a year. So once you identify that asset, then choose a qualified charity that can accept your asset as a donation. And then finally, work with a tax advisor to correctly value the asset and prepare the paperwork that's required to take that deduction. In some cases, an appraisal is required to substantiate the value for IRS purposes, so be aware of that. It's also worth mentioning that some charities may not accept all asset types. So confirming this upfront with the charity can save a lot of time and a lot of hassle in that deduction. Your tax advisor can give you on which forms are needed and how to ensure compliance with IRS requirements. There are certain forms and certain things that you need to do on the tax return in order to take that deduction. Now, while leveraged asset donations offer fantastic benefits, there are a few things to keep in mind. First, you'll need a proper valuation in the case of some assets. The IRS requires a qualified appraisal for certain types of assets, and failing to provide this can result in penalties or disallowed deductions. Also, there are deduction limits based on your adjusted gross income. For example, with appreciated assets, you can generally deduct up to 30% of your adjusted gross income if donating to a public charity. And finally, keep in mind that the IRS scrutinizes these types of donations closely, so complete and accurate documentation is essential to avoid any issues down the line. And that's the basics of the leveraged asset donation. This strategy can allow you to give generously while maximizing your tax savings. It's one of the many ways high net worth individuals can make a lasting impact with their wealth while achieving optimal tax outcomes. If you're interested in learning more, don't forget to subscribe to our channel for more advanced tax strategies. If you have questions or want to know how leveraged asset donations could work in your specific case, feel free to reach out to a qualified tax advisor or leave a comment below. And thanks for watching, and make sure to subscribe and go to taxtutor.com to subscribe for our weekly newsletter.